Alright, so I'm going to, and hopefully my mic is loud enough. Um, so I'm going to go over the market. So on the higher time frames, what was going on, and this is why like you have to know the positions on higher time frames. So what was going on was, if you take a look at the top chart, that's the daily chart. The one in the middle is the hourly, and the bottom one is the 5 minute. So I'm gonna zoom in kind of on the daily and explain what was going on. The market basically rallied off of this turning point up here. This right there was a turning point, and it rallied down. As you can see, RLY here is a rally. So it rallied down. After it rallied down, one sec. There it is. Alright, so it rallied down. It says 12, but I think it's like 120. I divided it. So, off of this turning point up here, the market rallied down. This, I forgot what I put it on. Oh yeah, 1200. So this is the daily chart. It has to be 1200. So when it rallied down 1200 ticks, what does that mean? That means the market is in an oversold condition. This is the biggest wave there is. Alright? So it's in an oversold condition. Right there. How do I know? I mean, it's going from up here to down here. The wave is big. It's 1200 ticks. And then I get this turning point right here in the little green dot over there, which means anticipate a turn. Now, I don't know how big the turn is going to be, although I was looking at the point and figure and it was telling me it was going to be a big move. But the point here is that it started moving sideways right there, and there's a turning point, and you get a turn up. Alright, now that's what the daily chart is showing. How does this up and down action look on hourly? On an hourly chart, it would look like this shit right here. But what's important about this is right here. This is a springboard, and it initiated markup. There are a lot of little nuances in springboards, like you'll have a range and then it starts, becoming an apex. So it looks like an apex. You get higher lows. The down waves are getting smaller. So you have a lot of that, and I can kind of show that here with this arrow. Like you see down wave, down wave, down wave, down wave, down wave, down wave. You see how, forget the line, I don't know why it's not drawing right, but down wave, down wave, down wave, down wave, down wave. They're getting smaller. Alright. And there was one other major indication, because I know where they accumulated. The accumulated were right there where it says high volume. It was the first evidence of accumulation was there. Okay, so I'm not going to do all the volume analysis because it gives me a headache. But over here, that's where they first bought. Like the heavy buying activity was over there. And then in here, it continued to accumulate. And basically at this point, supply dried up here and markup was initiated. Okay, so this currently is in markup. Now, trying to trade the turning points in markup, you have to be very careful, because they're not going to work. So I'll explain it in simple. Alright, so for example, over here, now I'm taking a look at the bottom chart. You have a pullback on high volume, but it was bought. You have another pullback on high volume, and the wave is smaller. The S over there means that it's smaller, and it was bought. You have finally a third attempt where they're selling. So this one over here, you had, you know, the the attempt, the second attempt, the waves are small, and all it was able to do was spring, or like test or spring this area, and we're still back in markup. So is it, you know the, the context of the market is extremely important because it will define whether the signals are going to work or not. If you have a market that's rotating, that's going up and down, sideways trend, then as soon as you have high volume and all of that, you can sell right above the, and like you can play a support resistance game very easily. But when a market is coming off of springboard and going straight up, it's much more difficult. So currently, this market is in markup on the hourly time frame. On the daily time frame is not in markup at all. In fact, you could say it's actually a deep pullback on the daily chart. Of a breakdown. So I'm, but for day trading, you might want to take a look at the hourly, because hourly says it's an uptrend, but it's really a counter trend or a pullback of a bear rally on the daily. All right, now we'll have to see how the behavior, and whether there's absorption and all that. So I'm gonna look for that and see what happens. All right, that's all, folks. Bye.